Hello, dear candidates. Thank you very much for joining back. So, this is our series of CMA Part 1 MCQs question based video tutorials. So, this is our second video in a continuation of our external reporting. So, let's begin our module number 2. According to Financial Accounting Standard Board and International Accounting Standard Board conceptual frameworks, the primary users of financial reports include all of the following except. So remember one thing, most of the candidates do not look into the last word except. They start looking at the primary users. And this is basically a kind of negative question. So when examiner asks you a question, what are the primary users, then look for the primary users. But here in this statement, they are not asking you who are the primary users. They're asking you who are not the primary users. So here we go. We have creditors. Technically, they are primary users of the financial statements. Investors and lenders, all three of them are the primary users of the financial reports. However, the regulators, they are not primary users of the financial statements. They take care of the information, they are concerned, but primarily they are not the users of financial statements. So correct answer would be regulators. Question number 2, module number 2, financial statement that provides a summary of firm's operations of a period of time. So students, remember, here they have given you two keywords, firm's operations and for a specific period of time. Remember, income statement is a financial statement which is expressing or which displays the operations of the business for a particular period of time, starting from first day of the period, ending at the last day of the period. It may be 1 year or it may be 1 quarter. So here the correct answer, the operational expression would be income statement, not cash flow, not financial position, not retained earning statement. So correct answer is income statement. All of the following are elements of an income statement except, again, there is exceptional question. There is exceptional statement. They're not asking you what are the components of income statement. They're asking you which one of them is not component of income statement. Shareholders equity is not component of income statement. That's technically part of balance sheet, and you can say statement of changes in owner's equity. So this option is an exception to income statement components. Revenue is part of income statement, gains and losses are part of income statement, expenses are part of income statement, but they're not asking you which one is part of the income statement. They're asking you which one is not part of the income statement. So correct answer is shareholders equity. Which of the following does income statement not report? Again, there is a negative question. Value of inventory sold during the period. Yes, income statement does explain this. Accounting profit, obviously income statement is prepared for calculation of profit and loss. Changes in cash flows during the period. So this third statement is basically the purpose of statement of cash flows, not the income statement. So I'm just holding this part C, but let's read through part D first. Revenue recognized under the accrual method of accounting. Obviously, when you sell something or deliver goods or provide services, revenue should be immediately recorded. So this is part of your income statement, but correct answer would be C, because they are asking you which one is not income statement part. So cash flow changes is not expressed in the income statement. Question number next. On July 15, a company entered into a 3-month agreement to rent a machine. That company needed to complete a special order. Okay. So point to be noted, students, company entered into an agreement. So this is not yet performed and entered into an agreement. The machine would be delivered on August 1st and rental payments are due on first day of each rental month. Okay. The effect this event would have on companies' July's 31st financial statement would be, so students, I already explained you in the first line, you look at the first line, they entered into an agreement, machine would be delivered on 1st of August. It means the rental will start after the delivery of machine, not before delivery of machine. But they're asking you, the last liner, the effect this event would have on the company's July 31st. So July 31st, nothing has happened. So no event has been occurred. No event has been performed by any of the parties. So I think so there would be no effect on the financial statements. So option A says increase liabilities and decrease income. Increase liability. So there is not yet liability. There is just an agreement. Decrease income, we did not pay anything. There is no expense. So it means rent has not yet started. So option A cannot be the right answer. Cause no change in assets, liabilities, or income. I think so. This B is the correct answer because this is just an agreement. Nothing has been performed by either of the parties. Increase both assets and liabilities. So this is again just an agreement. No event has been performed. So this rental will start after the delivery of machine, but on 31st of July, nothing has happened. Option D, both assets and income are increasing. No, that's not the case because we did not have delivered the machine and we did not start our earning of revenue. So this cannot be the right answer. So correct answer would be B. Yes, exactly. I explained you all the logical answers. Let's look into the last question of this video and then see you into the next video, please. An income statement could be used by external investors for all of the following purposes, except, again, the question is not asking you what are the purposes of income statement. They are asking you which one of the followings is not the purpose of income statement. Compare the company's result to those of its competitor. Yes, it is a purpose. Comparatively speaking, we can compare our company with any other competitor's income statement. Yes, it is the correct answer, but they are not asking you which one is the purpose. They're asking you which one is not the purpose of income statement for external investors. Analyze the company's performance compared to the budget. So here the keyword which is triggering you, the budget. So external investors has nothing to do with the budget because the budget is internal information. So let's hold this point for a while. Assesses the risk of companies achieving future profitability. Obviously, when you consider you are an external investor, you need to think or assess the company's ability for future profitability. Yes, it is the purpose, but this is not exception. Predict the company's future revenues. Yes, based on the past data, we can predict the future revenues. But point B, which is still valid point, which is not the purpose of external investors, they have nothing to do with the budgeted information because budget is the internal matter, internal information. So I would say correct answer is B because this is not purpose of income statement for external users. It may be for internal users, but not for external users. Yes, it is the correct answer. So keep connected yourself with this video channel. I will be uploading more CMA part 1 videos in upcoming days. So see you next video. Thank you very much.